What's up, builders? This is Raise the Bar Radio, where we talk about building wealth, raising capital, and all in all, raising the bar in your business and your life. This is the No BS podcast for capital raisers, investors, and entrepreneurs who are serious about scaling their business and living life on their own terms. I'm Seth Bradley, securities attorney, real estate investor, and entrepreneur, bringing you world-class strategies from the best in the game. If you're ready to raise more capital, close bigger deals, build a better you, and create true financial freedom, you're in the right place. Let's go. All right, welcome to Raise the Bar, elevated conversations around entrepreneurship, capital raising, and real estate. Today we've got Rob Beardsley, the CEO of Lone Star Capital that he founded in 2018, and he has overseen the acquisition, financing, and management of over $750 million in apartment communities, and probably a lot more than that by now. Rob drives the strategic growth of the firm while overseeing the operation of 5,000 plus apartments. He's a best-selling author and has sold over 30,000 copies of his 2 books on commercial real estate and a sought-after speaker at industry conferences nationwide. Rob, welcome to the show, brother.
Thanks, Seth, for having me.
Absolutely, man. Dude, I always like to kick it off with this. I mean, when a stranger comes up to you on the street, asks you what you do, what do you say?
That's a great question. And, unfortunately, not normally, every single time I'll kind of bumble through and say something like, oh, well, I manage apartments. And say, oh, cool. You where? And then say Texas. And, I feel like this is an opportunity to really leverage the one-liner that we use. And I just need to train myself. So when someone comes to me on the street, I'm going to say, we provide monthly cash flow and peace of mind for long-term investors through tax-advantaged multifamily real estate. Boom. Like, I can't go wrong. If I just stick to the one-liner, I'm set.
You might get some questions, though. And folks, you tell me that. I understand what you're saying. A lot of our listeners probably understand what you're saying. I think, the random person off the street is probably like, what the hell is he talking about, though?
Yeah, it's true. It's true. So to give it more context, kind of what you mentioned in the intro, we are a multifamily owner-operator. We're here based in New York City, but we actually have a portfolio exclusively in Texas right now of nearly 5,500 apartments. We manage them all in-house, and so that's really the bulk of the business. It's funny because what everyone likes to talk about, and I'm sure we'll get to it today, is acquisitions, financing, partnership structures, raising capital, sales, marketing, and all that is really super valuable, and it's where you make the money. But where I spend the majority of my time and where really the labor of love is in this business is the management, right? And property management's a very people-intensive business. And so given that we have over 200 employees, we have so many, thousands of families that we serve across our portfolio, and there's, tons of maintenance and construction and all this sort of stuff. So that is where the meat and potatoes of our business truly is.
Yeah, and I think you're seeing that kind of now in today's market. While a lot of people that had success maybe 5 years ago have fallen off, maybe that's due to the market, interest rates, things like that. But you're seeing that operations really matters, right? A lot of people, again, 5 years ago were saved by just, rent rates going through the roof and just the market just going really well and in a positive direction. And operations didn't even matter so much. Like the values just went up regardless of how you operated it. But in today's market, it's not like that. Like you have to know how to operate these properties. And it sounds like doing hands-on property management in-house yourself, you've seen some success with that.
Yeah, that's absolutely true. And I think that's a big differentiating factor between kind of like you said, the pretenders and the people who are really in this business the long term. Having your own management that you control, it doesn't necessarily guarantee success, but it really puts destiny into your hands.
That makes sense. Have you ever had third-party property management, or have you developed that in-house from day one?
Yeah, it's very difficult to have in-house management from day one. So we started out like everybody else with third-party management. And then at some point, most people bring property management in-house when they achieve a certain amount of scale, whatever that might mean to them. For some people, it's 500 units. For some people, it's 1,000. For some people, it's 10,000. So it kind of just depends on how you're set up and also the markets that you're in.
Makes sense. Is it a profit center for you at all, or is it really just keeping that close to the vest and being able to operate those properties?
Yeah, it's definitely not a profit center.
Yeah.
It's hard. I really don't understand the management business as a fee, right? So when people provide third-party property management, the economics, it's such a bad business. It really just doesn't make any sense how it works. The general structure of the business is that property management firms get paid a 3% property management fee. This is just generally speaking for larger apartment buildings that are 200 units plus, right? So if you're talking about a single family home, you might see people charge a 5, 8, or 10% property management fee. But in this scale, it's a 3% management fee based on the revenue of the property. And that comes down to really just could be as little as a few $1,000s to maybe 10-ish $1,000 per month on these assets. And that's very hard to actually turn a profit on because of all the kind of background stuff that you need to do. You need to have the operations personnel. You need to be able to deliver accounting. You need to handle HR, payroll. There's a lot of costs really to run the properties themselves. And so these third party management companies can't really make a profit unless they achieve massive scale and spread themselves very thin. And so that's just not that's not a recipe for success, right? So we try to do the opposite, and we try to not spread ourselves too thin. So we don't offer third-party property management to properties outside of our portfolio. We just focus on our own assets, which still gets hectic at times. And then instead of having, one regional manager across 10 or 20 properties, right, we have our asset managers focus on 6, 7, 8 properties. And so we really are able to deploy more hands-on resources uh, on a property by property basis.
Yeah, I was just talking to a buddy the other day about this because he does in-house property management for his properties, and he was talking about opening that up to start managing other people's properties as well because he's thought, hey, I've built the systems, I've got some team members, things like that. And I said, have you really like ran the numbers on this? Like the margins are so thin. You've got to scale with people, lots of operational costs. It's pretty insane that people even believe that that's going to work. Like if you put that on paper and you just realize how much operational overhead there is and the people you're going to have to bring in to be able to operate a third party property management company, it's a really tough business to grow.
It truly is. Someone has to be way better at business than me to do that. So that's someone who's got things really dialed in from an operations perspective. What I would say as far as unsolicited advice to your buddy is if you're going to put in the effort to scale that, right, it's going to require sales, and you're going to need to spend time and effort selling other owners as to why they should pick you as their management company. And instead, why not focus on building up a sales arm to go and raise capital to grow your own self-managed portfolio?
Totally. Totally. Tell us about acquiring properties right now. Lone Star has been actively acquiring properties over the last few years, while other firms have not been able to do it either because they have some deals from before that weren't going well, or because the numbers just don't make sense. What's working for you guys? How are you able to put your head down and make deals work in this market?
So in this market, like most of the time, there's three components to being able to close deals. Number one is you need to be able to raise the capital. And that's pretty obvious, and we can get into that in a second. And the other one is you need to have a good opportunity. And that has been a challenge at times in this market because there's been a major decline in transaction activity. If there was, let's say, just to make numbers even, if there was in your market 100 deals that traded hands every year, or at least kind of in the more boom times of 2021, 2022, 23, 24, and now in this year, you're probably looking at maybe 20 transactions, maybe could be even less, could be slightly more, just depending on how liquid the market is and how kind of deflated the market has come down. So the markets that are most oversupplied are the markets that have seen the biggest decline in transaction activity. So I'm talking like Phoenix and Austin are two that come to mind. Great markets, they just got overbuilt with apartments. And so because of that overbuilding, people are offering such big concessions and performance is down so much that people aren't interested in selling because the numbers just don't work for the buyer or the seller. So it's just halted transactions. So with that in mind, how do you buy a deal if nobody's a willing seller, right? So that's very tough. And then the third piece is operations. You might have the pieces, meaning you can raise the money and you found a good deal, but you might be spread so thin operationally because you have a portfolio of bad deals that you bought and you're trying to save them, turn them around, struggle. And so, like you mentioned, people are struggling with the deals that they did a few years ago now. And the couple ways they could be struggling are operationally or financially or both. And then those struggles could then kind of bleed into their ability to raise capital. And so that's a big challenge for a lot of folks is, yeah, they were able to raise 1, 2, 5, 10, $20 million when the market was hot. It's much, much more difficult to raise capital when the market is down. And thankfully, we're seeing it, but we're not really feeling it too much. And so that's one of our keys to success is we're still able to plug along and raise capital because of our strong relationships, because of our relatively stable performance. I think our transparency, our communication, and all those good things. So raising capital, that's when it's the hardest, it's the most valuable because right now, if you do have the ability to raise money and deploy it in a good deal, it's going to pay off in the next 3 to 5 years.
That's right. I totally agree there. I mean, it's really difficult to transact right now, to acquire, to find good deals that you can actually make work, either because of the numbers or because operationally you're limited, like you said, or like you said, it's really hard to raise capital to even buy these types of properties. But that means it's probably a really good time to buy. Like if you can get it done, if you can get the deal done, 3 to 5 years, that's going to look like a phenomenal deal. You're going to look back and say, man, that was the time, right? Like 3 years ago, we should have been buying like we're buying today. When we were buying at a discount, it would have been incredible. What else are you seeing out there as far as raising capital? Like what's working for you guys? How are you having so much success being able to acquire these properties? A lot of folks, they used to be able to raise $5-10 million pretty easily. Now they're like, look, our investors are shot. They're done. They're done with multifamily. They got burned maybe in a couple of deals. They're having a hard time raising that capital. What's been successful for you?
Yeah, well, what's interesting is what we kind of call this type of capital hot money. And so what we mean by that is it's attracted to the space when everything is hot and moving fast and people are selling and getting great results. Then all of a sudden you've got these investors who kind of aren't really, they're kind of tourists into the asset class and they come in because they see everything's going so well, but then when things go poorly they get out. So some people really focused on that hot money, or it just kind of came to them as a consequence of their marketing. And what I mean by that is if you, during 2021 and 22 when things were really hot, if you were promoting your deals as if they were rocket ships and you had emojis in your emails and you were projecting 20, 25, 30% returns, you would attract the hot money. And that's great because you would raise the capital and you'd close the deal. The savvy investors will say would not be attracted to that sort of deal profile, projections, and marketing. And so that hot money has left the space, but the more savvy, permanent type investors are still here. So based on the type of marketing and our positioning in the market, we did not attract the hot money, which was frustrating when the market was hot because we saw a lot of investors turn us down and invest with somebody else because we were projecting a 15% return, not a 25% return. So the hot money would go to the 25% projected deal, even though the deals are effectively the same. It's just what returns are you projecting? So because we did that, we didn't attract the type of investors who had unrealistic expectations about the asset class, would be more likely to get disgruntled and perhaps even litigate in difficult circumstances, right? And that's the worst thing you could have happen. And so we're seeing that in certain circumstances where deals are going bad and now people are talking about or actually suing and all that kind of stuff, which, really that's the number one thing you want to avoid. So that's something I think with the type of marketing that we do, and anyone else, it's not unique to us. Anyone else is perfectly capable of doing this too. It's just very hard and it's tempting to kind of project higher returns and stretch the numbers because why? Because it'll make today so much easier, but it will make tomorrow harder. So we kind of constantly remind ourselves that we want to make today hard so that tomorrow is easy. And what I mean by that is if we project conservative projections and we strive to underpromise and overdeliver, we're making today hard. Raising the money is just going to be harder today, but when things perform to plan or even better to plan, then tomorrow is way better.
Yeah. And Tell us a little bit more about the branding and the marketing and the positioning that your firm does. I mean, and you do an awesome job of it, right? Like when I think of Lone Star, I think of like professional and buttoned up and safe, right? And I think that's what you guys are going for. I hope, because that's what I feel. Is that what you guys are going for? And how did you kind of develop that? Is that really a personality that you guys have and now you're protruding it out into the market, or how did that come about? Pardon the interruption, but we don't do ads. Instead, know that if you're raising capital for real estate, my law firm, Raise Law, is here to give you the expert legal guidance you need to raise capital compliantly and structure and close your deal. And if you're looking for a done-for-you fund-to-fund solution, TribeVest is the industry's only all-in-one setup and fund administration solution. Visit raise.law and tribevest.com to learn more.
Yeah, well, I appreciate that. And I think that is definitely intentional. I think where it comes from is our desire to think and act long term. We think in terms of how we want to be perceived and where we want to end up 30 years from now. So when you think about it that way, it's okay. You can live with kind of maybe growing a little more slowly or saying no to an investor, right? If we just don't get a good vibe from them. And that sucks, right? Because you need to raise the money today to close the deal, right? It's easy to be idealistic, but when the rubber meets the road, you got to make payroll, you've got to close deals, you need to grow. So by keeping the focus on the long term, we can more stay true to this long-term desire and brand of, we want to be the safe investment, the transparent communicators that you can rely on, that you can invest with us for the rest of your life. Because odds are I am younger than our investor is, right? So I'm going to be investing for as long as they want to be investing. And so that's kind of how we think about it.
Yeah. Yeah. Let's jump into that just for a minute, man. You are on the younger side, but not anymore. You've been in the game now for a while. I feel like back in the day, like it would have been like, Rob's on the younger side, but you're not anymore. You are in it, man. You're running a $1 billion company, like absolutely crushing it. How did you get into it so young though? Because I'll tell you, my personal experience during my 20s, I was not building a $1 billion business, man. I was out chasing women and going to classes. That's what I was doing. Like, how did you get into this so early? It's an incredible story.
Yeah, I appreciate that. I was super lucky to get into this industry at a young age. I think that, basically what happened, my quick backstory is I grew up in Silicon Valley, California. My parents were residential brokers, agents, and they did some single family type investments and construction. So I had a background in real estate that I could kind of build upon. And then, but my family never really did any sort of investments or raise capital or anything like that. But they had a great reputation in Silicon Valley of just being good agents, servicing the clients, being honest. I think that's probably where I got some of that from, because my dad is honest to a fault. And he will tell clients things that would be directly against his personal interests, but it's just he can't help himself. He's just so honest that he's just doing what's best for them. So I definitely got that from him. But I also got an influence in terms of like the startup culture and the tech scene of Silicon Valley, right? And seeing all these successful people and seeing these amazing companies like Facebook, Google, et cetera, being in the vicinity. So I went to school for computer science and kind of thought I'd go into some sort of like tech startup route or something like that. But in college, I got the real estate bug. And so I started just basically spending all my free time studying real estate by attending like local events and conferences and reading books and doing podcasts, like all that stuff that's widely available these days that is tremendously educational and valuable. And basically I just soaked it up enough to where I was just ready to go. And I was just doing networking. I was looking at deals. And so by my second year of college, I already had a deal under contract, and that was when it became real. And I told my advisor, I said, hey, this is real. I'm going to take a leave of absence. And everyone, for the most part, was supportive of the decision. And I was willing to take the leap of faith. And so far, so good.
Yeah. What was that like, man? That risk, like that's a risk that you took, right? Getting to the point where you're in college, you're like, everybody's like, oh, Rob's doing the right things. He's going to college, he's going to get a degree, do all these things, the traditional path. And you stop and say, you know what, that traditional path is not the way that I want to go down. And I see this massive opportunity here. I mean, what was it like taking that risk? Like, what were you thinking at the time?
Yeah, my thought process was a combination of individualism, being willing to step out of line and do my own thing, combined with pragmatism. So I just looked at the situation very pragmatically that, I've discovered this business opportunity. Not that this is some unique business or super niche or anything, right? There's a lot of people doing, I mean, real estate's one of the oldest businesses in the book, right? But it just resonated with me so much because I felt that it's something that I could sink my teeth into and do for the rest of my life. And also, I just pragmatically saw how much money I could make versus, okay, I could finish school, get a job, and kind of go that track and how much money I could make there. So, pragmatically speaking, the risk was worth the reward because if I failed, I could just circle back to where I was and I'd be no worse for wear, basically. But if it worked out, then, like you said, I'd be able to kind of get my start so early in the business that by the time I put the time in, like you no matter when and where you go, you're going to have to put that time in. So the earlier you commit and just stick to it, the better.
Yeah, that's really interesting. So you saw it as actually less risk by taking this opportunity, not more risk. Whereas I think from the outside in, they might be like, he's taking a massive risk by, doing this venture outside of the traditional sense, outside of college. But you saw it as less risk.
A little bit, and I'd also say that if you are able to take your ego out of it, then yes. But the problem is the risks really come to your ego
Yeah.
because, when I left school, there were students that I kind of heard talk behind my back saying, "Oh yeah, he's not going to make it," or "Oh, we're essentially better than him because we're still in school and he is dropped out, like he couldn't go through with it," type of thing. So, if your ego can handle that, if your ego can handle the just the challenges of growing a business, like I mean, anyone who's started a business knows that it's a very, very difficult journey. So your ego takes a hit. It's very humbling, all those sorts of things. Um, but in reality, all those things are very healthy. So it is actually less risk because you're gaining so much in experience. And what are you really giving up?
Yeah. Yeah, and it's hard to do it's harder to do, I think, when you're younger too, because you do tend to care more about like what other people are thinking or what they're saying. But you had that maturity at that young age to say, you know what, like they can say what they want, they can talk. I know what I'm doing here, and I'm going to take this risk and pursue my dreams. And look how it paid off.
Yeah.
That's awesome, man. Awesome. Tell me what you're obsessed with right now. You've written a couple of books about underwriting, and you're a numbers guy, and you're acquiring apartments, and you're deeply involved, obviously, with running your company. But like, what's maybe one thing that you're just obsessed with right now that you're just going multiple levels deep on right now?
That's a great question. To some extent, I would say accounting. Accounting, something that I've been spending a lot of time revamping at the property level, at the company level, and there's many facets to that. There's accounts payable, there's financials, there's taxes. So I've gone down that rabbit hole more than I ever thought I would, because I'm not an accountant, right? And that's honestly a huge mistake and big regret. I wish I would have become an accountant with air quotes, so to speak, from the get-go. I wish I would have actually put my head in the weeds from the beginning, because it would have served me very well in many ways, right? And I've heard it said, and it's perhaps even cliche to say, but like accounting is the language of finance and business. So you got to speak the language and you got to know it. So I that's one of my big regrets, and I'm correcting that wrong as we speak, as I'm kind of obsessing over accounting, like you said.
Yeah, I know you'd be really good at it. Are you seeing that? Or are you just like, man, I love this and just digging in?
Well, my joke about accounting, because I have like a very split brain where like part of me is a visionary and part of me is just like, I love doing kind of just grind work and numbers and that kind of thing. So when I'm doing accounting stuff, I joke with people and I say, yeah, like if I could just do this and make $1 million a year, like I'd be happy, right? Unfortunately, it just doesn't, doing this kind of boring, repetitive task doesn't pay that well. So I've got to do something else.
Yeah, makes sense. Makes sense, man. I always love to ask this question. In a parallel universe, tell me about a different version of you, right? And maybe it's what we just talked about the college thing. For me, I went to med school for about a year and a half, and then I dropped out because I just knew it wasn't for me, and I just had that entrepreneurial bug deep within inside of me, and I didn't even know what it was. And if I would have continued that path, it would have been totally different. Maybe I'd be a plastic surgeon or a doctor doing that different path, not better or worse, but different. What's one of those pivotal moments, and describe what that might look for you?
It's really hard to think about this because I feel like I'm living, my path, right? So there's no alternative, right? It's so hard to
Totally.
think about it, but I totally get what you're saying. And for me, I would say that pivotal moment was when I got to college. And that was because my whole life was committed to football. I was a quarterback in high school. I, spent all my time obviously being a good student so I could get into school and stuff, but I was studying film, I was training, I was lifting weights, I was practicing, I was doing everything to be the best I could be so that I could it was just my passion. It was my focus, right? And pouring myself fully to something to be a master is just what I like to do. So at that time, growing up, it was football. And so unfortunately, I wasn't good enough to get recruited to a D1 school or even like D1 AA at an Ivy League, which was really my dream to get the best of both worlds, to get into an amazing Ivy League school and play football there. But I was good enough to get, the attention of D3s. So I was able to actually get into Carnegie Mellon and on like a quasi scholarship for football. But when I showed up to campus for like the summer practices, I felt a pit in the pit of my stomach that it was not for me anymore, and it was something that I could not go forward with. And that really kicked off a new chapter in my life where the football chapter was closed, and then my new life all of a sudden was, okay, well now I have an extra 30 hours a week, 40 hours a week. What do I do with it? And that's when I just really went down the rabbit hole of making money, business, real estate. And my alternate universe could have been that I played football. I had a major passion for it. Maybe I would have ended up being like a high school football coach or something like that, and a quarterback coach, and just taken my, passion and desire to be a leader and a coach and a teacher in that regard.
Yeah, that's incredible, dude. I mean, yeah, maybe you wouldn't have been able to have that space to be able to open yourself up to business and real estate and kind of went down that pathway. And maybe you would have been committed to football, which you sound like, and I know you who you are, like you'll commit 100% to it, right? And you wouldn't have been, you would have felt bad. You wouldn't have walked away from college that easily if you were on the football path as well. So that's an incredible pivotal moment in your life for sure, man, for sure. What's one limiting belief that you've had in your life, and how did you overcome it?
Ooh, limiting beliefs. Well, I would say that a limiting belief is kind of everyone has to some extent some sort of ceiling as far as how big what their vision can be, how big their vision can be, how fast they can get there. And the way to break past it is to have a mentor, to have a partner, to be able to grow with someone, and to have someone kind of show you firsthand that it can be done. It's kind of like the whole situation where once someone ran a sub 4 minute mile, I think it was something like that, right? Then all of a sudden everyone's doing it, right? So you need to be able to see to believe. So putting myself in rooms of people or hearing from people where they're really making these sort of things happen, whatever the case is, whatever at the time it was that I was intrigued by, that is the most powerful elixir for growth and for busting through your paradigms. So it's not, networking is expensive, and this is something that maybe some people, I'd say most of your audience probably totally understands this, but if you want to be in the rooms of people who are highly successful, if you want to talk to them, learn from them, it's not cheap. You're going to have to pay for flights to be in those places. You're going to have to pay for conference tickets to get into those places. You're going to have to go out on a limb because you might have a friend who invites you to a certain dinner or something and you don't really know who's going to be there. So you're going to spend the time and money to just take a chance on it. And so those are the things that I have done to get to where I am.
Yeah, it's so true. I mean, you've got to network, you've got to get in the right rooms. It's like you're like stretching, right? You're stretching, your mind is stretching where it thinks it can go. And once you see it and you're around other people that have done it, then you know that you can get there. And it's almost just your mind just automatically just does that. Get yourself in the right rooms. If it's expensive, it's worth it. Just keep doing it. Are there any particular core values that you hold really high, like whether it's in your life or in your business, that you just, these are the things that I really hold on to? For me, it's accountability and just, stepping up. If things need to get done, do them. Don't blame somebody else. Don't wait for somebody else to do something for you. Be accountable to yourself and your family and friends. What is it for you?
Yeah, I think that's a great one. I think for me personally, I want to be always striving for improvement. So I am a bit restless in that regard, which is a great thing, but also a bad thing. So you kind of need to balance it. You need to meditate. You need to kind of be in the moment, but always looking for improvement. If I see someone who is just complacent, stagnant, that rubs me the wrong way. So I feel personally just a strong desire to just always improve whatever I'm doing. And that's why I had to quit football, because I did not see the value in just hanging around just to be around, right? It's either I'm going all in or I'm out. And so that's how I feel about whatever it is that I want to be spending my time on.
Totally. I'm right with you, man. There's nothing more frustrating to me than being in rooms with people that just, they're just comfortable where they're at and they're not trying to improve. And they don't have to be an entrepreneur like us, like that's the route that we've chosen. But, if they want to be, they just need to want to be better, like in their personal life, at their job, at their career, as a father, as a mother, whatever it is. But they just need to have that, right? That desire to improve and get better. And people that don't have that just frustrate the hell out of me, man.
I agree.
All right, brother. Well, it's been great having you on the show, man. Where can our listeners find out more about you?
You can head over to our website. That's lscre.com. On our website, you can get in touch. You can check out the free materials that we have available, as far as our fund manager toolkit, books that I've written, and articles and more.
Rob, always a pleasure, brother. Good to see you.
Thanks.
Thanks for tuning in to Raise the Bar Radio. If you enjoyed today's episode, make sure to subscribe, leave a review, and share it with someone who needs to hear it. Keep pushing, keep building, and keep raising the bar. Until next time, enjoy the journey.